gotta tell you something I could do.
And today I'm going to be talking about my favourite Vanguard ETF, and that is the S&P 500 with the ticker symbol VUSA. And I'm going to be telling you my 5 reasons why I absolutely love this ETF. Let's not waste any time and let's just get stuck in point number 1, and that is the ongoing and fantastic historical track record. The S&P 500 is known for its exceptional track record. It is one of the most spoken about ETFs on the whole of YouTube and within the investing community. And over the last 30 years, the S&P 500 has achieved a compound growth rate of 10.7%. You can be certain that if you invest in the S&P 500, then you are going to earn a substantial return on your investment. And in at number 2 is the diversified nature of the S&P 500. Now, you may be sat there thinking that the S&P 500 has 500 companies in it, and I wouldn't call you a fool if you did that. However, the S&P 500 has 507 companies in it, and that is because there are different classes of stock. The most popular example is Alphabet with stock class A and C. And because of that, your investment is being spread at a ratio between those 507 companies on that stock exchange, meaning that one volatile movement in one stock will not have an overall large impact on the worth of your total portfolio. And this helps you to minimize and control the risk that you essentially expose yourself to. In at number 3, tech companies. The haven of the new world. I absolutely love tech. And that is exactly why I love the S&P 500. When you invest in the S&P 500, you are investing in the world's largest tech companies. You're investing in Apple, Tesla, Microsoft, Alphabet, Facebook, or should I say Meta. These companies are going to continue to grow at rapid rates, and you can be sure that you benefit from those when you do invest into the S&P 500. In at number 5, it pays a reasonable dividend yield. Now let's compare this to the likes of the FTSE 100, which typically pays a very good dividend yield of around 4 to 5%. The S&P 500 will pay a dividend yield of approximately 2 to 3%. And although not as good as the FTSE, the 2 or 3% is enough to cover you against inflation. It is essentially protecting you from losing the value of capital against the standard inflation rate. Inflation typically sits at between 2 and 3%, and the dividend yield typically sits at 2 and 3%. So you can be sure that that is basically safeguarding you against the effects of inflation. But not least, my absolute favourite, and that is because it is available in the UK as part of a stocks and shares ISA. And the benefit of having a stocks and shares ISA is that your earnings and your capital gains are tax free. You can pump all your money, well diversified, low risk, nice high return investment into the S&P 500, and you won't pay any tax on the earnings that you have. You are making your money work harder for you, and you are getting all of that money completely tax-free. But that's all from me today. I look forward to the next one. Until then, goodbye.